Welcome back, everyone, and that wraps up today's update on USA Rare Earth. The company is moving closer to production and has secured major funding, but it remains pre-revenue and still carries execution risk. USAR has delivered a strong performance in recent months, with its stock climbing 35.6% over the past 3 months. This performance has matched the broader industry's return and significantly outpaced the S&P 500's 3% gain during the same period. Compared to peers, Neocorp Development's YTD gained 4.2%, while BHP Group advanced 34.5%. This video is for informational purposes only and is not financial advice. Please do your own research before making any investment decisions. The company is steadily advancing its Stillwater magnet manufacturing facility in Oklahoma toward commercial production. This facility is designed to manufacture neodymium iron boron, NdFeB, magnets, critical components used in defense systems, aviation, electric vehicles, renewable energy, and other high-growth industries. Once operational, the Stillwater plant is expected to become one of the first large-scale rare earth magnet manufacturing facilities in the United States, supporting efforts to establish a secure domestic rare earth supply chain. Currently, USA Rare Earth is installing key production equipment, assembling Line 1A, and finalizing preparations for commissioning, which is scheduled for early 2026. The company has also begun hiring and training engineers and technical staff to operate the facility. These steps are expected to accelerate the path toward commercial-scale production and help secure long-term supply agreements with customers. On the financial side, USA Rare Earth has significantly strengthened its balance sheet. Through PIPE financing and warrant exercises, the company increased its cash position to over $400 million as of November 2025. In January 2026, it completed a substantial $1.5 billion PIPE financing. These funds are being directed toward upgrading the Stillwater plant, expanding magnet finishing capabilities, and completing Line 1B, which will increase total NdFeB magnet production capacity to approximately 1,200 metric tons annually. Additionally, the company completed the acquisition of Less Common Metals, LCM, in November 2025, securing a critical supply of metal and alloy feedstock for the Stillwater facility. In December 2025, LCM partnered with Solvay and Arnold Magnetic Technologies to ensure a reliable and premium quality supply of rare earth materials. These strategic moves position USA Rare Earth to scale operations efficiently and expand production capacity in the coming quarters. Despite these positive developments, USA Rare Earth remains in the development stage and has not yet generated revenue. Since its inception, the company has operated in exploration and research phases, resulting in ongoing losses. Rising operating expenses have weighed on profitability. In the third quarter of 2025, selling, general, and administrative expenses rose sharply to $11.4 million compared to $0.8 million in the prior year quarter, primarily due to higher legal and consulting costs, increased headcount, and recruiting expenses. Research and development expenses also increased to $4.45 million from $1.16 million year over year, driven by higher employee-related costs. With no revenue to offset these rising expenses, the company reported a loss of $0.25 per share for the quarter. On a broader scale, USAR stock has surged 83% year-to-date, including an 88.4% jump in January alone. The rally was largely driven by the announcement of a long-anticipated collaboration agreement with the U.S. government. A development investors had speculated about since MP Materials secured a similar deal last July. The agreement, announced in late January, brings both advantages and risks. On the positive side, the company secured $3.1 billion in funding, including $1.3 billion in a senior secured loan, $287 million from government equity investment, and $1.6 billion in private equity financing. This substantial capital injection significantly reduces execution risk and strengthens the company's long-term growth prospects. Management has since raised its medium-term operational outlook and outlined financial targets extending to 2030. However, the issuance of shares and warrants to the government and private investors diluted existing shareholders and introduced potential political and regulatory risks associated with public-private partnerships. Overall, USA Rare Earth stands at a pivotal stage. While it remains pre-revenue and faces ongoing operational cost pressures, strong government backing, strategic acquisitions, and significant funding provide a clearer pathway toward large-scale production and long-term growth. If you found this analysis helpful, make sure to like the video, subscribe to the channel, and turn on notifications.